Good morning. It's August 13th, Friday, 5:58 a.m. This is episode 13. Good morning, guys. Good morning to you, Wowie, and to each and every one of our listeners. We are again at another hot streak as the US stock market hit all-time highs again for the third straight day this week. For our listeners, you are in for a treat as today's episode is nothing short of special as we have our second guest ever in this podcast. Stay tuned Stay tuned in as we will introduce him to you guys in a few. A hint, he is a good longtime friend of mine for 16 years now, and he is also involved in taking his finances head on as he shares the same interest in investing in the stock market. Furthermore, he is a self proclaimed lazy investor and focuses on long term investing. This is your host, Mark Yu.
And Wawi Santos.
Welcome to the Mark You and Wowie show. A
Good morning.
disclosure. Mhm. Good morning, guys. This show is made for sharing information purposes only and not to be considered investment advice. We record once a week. I and Wowie are both physical therapists here in the USA with the same passion and interest in researching and investing our hard earned money in the stock market. The show's goal is to share and learn from each other, answer questions from our listeners and coworkers in the medical field. And for those who are our coworkers or colleagues, thank you all of you guys for your hard work. Like I said before, there's no one else that will walk a patient right after a major heart operation or a hip surgery without the nurses and therapists out there. Thank you guys for your service. Not to forget, we are available on YouTube, Spotify, and Google Podcasts. Just a brief recap on our previous episode, we discussed Square's large $29 billion bet on the buy now and pay later business of Australia's Afterpay. We took note of the contrarian investor sentiment and money flow that has been ongoing in China stock markets. We also played a couple of clips from none other than Oaktree Capital's Howard Marks and BlackRock's Larry Fink. For those who have missed it, feel free to go back and listen to it, please. In the meantime, thank you for the feedback from our listeners. Thank you for supporting us by liking and subscribing. So let's get to it, guys. So our special guest today, aside from being a longtime good friend of mine, also share the same passion in investing. I have invited him over because I think he is one of those people who are willing to share their experiences in investing and probably share some lessons as well as he dive into his financial journey. Listeners, we are blessed to have no other than Mr. Stephen Bianes joining us this morning. Thank you for accepting our invite, Stephen.
Hey man, thank you for the invite. Hello Mark. Hello Wawi. Kumusta?
Kamusta?
Mabuti. Welcome,
Nice,
Peewee.
nice. Salamat.
So Stephen, or I will call you forward as Peewee. So can you tell us something about yourself, if you don't mind? How did you start investing?
So I started back in 2016, but prior to that, I think what started everything was when I got here in the States back in
Mhm.
2012 as a physical therapist, just like the both of you.
Oh, so back in 2012, wow, that was quite a years back, almost 10 years ago.
Yeah,
So
man, 9 years.
9 years now, no? Looking back. Me and
Yeah.
Peewee, for our listeners, were good friends, and we actually met back in 2005 during our first year as a bachelor physical therapist student. So we've so how can what kind of experience or what kind of like what happened or what is the stimulus that made you interested in the stock market?
Oh man, I think it was because of pure ignorance, to be honest.
Mm-hmm.
So back home, I was so just like you and other Filipinos we're very used to third world country,
Mm-hmm.
lifestyle.
Mm-hmm.
So all of us have a reason for leaving our country, and it's because of poverty. So
Right.
I was good. I was good at being, for me, just middle class or somewhat low middle class. I was good at that,
Mm-hmm.
but I wasn't good at making money. So when I came here in the States, it was a whole different ball game because I started making money and I didn't know anything about it.
Mm-hmm.
I knew the old wisdom of putting it in the savings account, and that was
Right.
it. So
Mm-hmm.
it didn't make sense because I was like, okay, how do I propel this money forward and multiply it?
Mm-hmm.
And I was thinking, okay, I remember like old people, they were like, oh, you just got to work hard. You got to put in like 40, 50 hours,
Wow.
which for
Yeah.
me didn't make sense because time is very important to me. Time is very important to everyone. And I was like, okay, how do I multiply my income from my job as a physical therapist? And what can I do to grab different streams of income from the right, from the left, so it'll work for me? And as I catapult myself 20 years from now, 40 years from now, 60 years from now, how can I make myself wealthy? And wealthy is very subjective. And for me, I define what wealthy is, and I'm actually headed towards that way.
That's amazing, Peewee. So
Yeah.
at least to begin with,
So-
were you? Go ahead, Wawi.
I'm interested in knowing where you found your ideas. You mentioned, I know, multiple streams of income.
Yeah.
So where did you find your inspiration or ideas from?
So my first strike at having a business would be when we were in the Philippines. Me and Mark and my other friend Mark, so the three of us, we started a business around physical therapy. So employment was very scarce back home. So we couldn't get a job at a hospital, couldn't get a job anywhere. There was a lot of supply of PT. So what we did was we pivoted, we started a business, and we focused on CEUs. So continuing education. So nobody, I mean, it's not fair to say that, but there was a business way ahead of us that did that, but for a long time they were kind of stagnant. So we were kind of like the new generation of saying like, hey, we're gonna offer you guys CEUs, and everything. It was new. People were excited. It was kind of like, like, oh, we're gonna learn new things. We're gonna invite different speakers from Australia, from India. It was kind of exciting. So yeah, so that was my history with business. And when I came in here, I started my own business as I have a physical therapy, not just physical therapy, but therapy staffing agency. So aside from being employed, having my W-2, I have that on the side.
Oh, so you were an educator, both of you guys, starting out. So what did you learn during the times that you guys were trying to start that business, CEU business in the Philippines? What were the main lessons you learned starting out?
As a disclaimer, I wasn't an educator, nor was Mark and the other Mark. We were mainly like businessmen. We were like in the back door.
Right.
Nobody knew that we were doing it because we were fresh out the boat in terms of like just passing the boards. Like, we were very green. And then we started this business. Our first seminar, I remember there were about 130 participants.
Yes, it was a blowout.
It was a blowout. It was in Aberdeen Court at Quezon Avenue in Quezon City. We were expecting 10, 15 people, but there was like 130 people that came in.
Wow.
Yeah. So what I learned there was there's no better way in learning than jumping in. We made a lot of mistakes. We weren't emotionally competent. We weren't managerially competent. But you know what? We did it. There's something about just kind of jumping in front of the bullet and just like, I'm gonna do it. And we did it.
Yeah.
Learned a lot, gained a lot of friends, gained respect over it, which for me is very important. So I love that I did it.
That's wonderful. And your friendship is still intact throughout these years. So that says a lot.
Yeah, I think our friendship really surpassed, any hurdles, any good and bad times. As he said, 16 years. That's a long time.
That's a long time. That's incredible. And to be with you during that journey and until now, Pew, I could say that it's been a worthwhile journey, and it's definitely more years to come. But yeah, going back to what you've said, Pew. It sort of reminds me of that Robert Kiyosaki book, The Four Quadrants. They're like employee. I think. Just correct me if I'm wrong. There's investor. There's a self-employed. So you kind of made that transition now. Whereas instead of just being stuck in one quadrant as an employee, now you have that mindset, starting your own business and being an investor. But any like how do you say it? What would you tell yourself back then when you were just I would say starting off like in your early 20s, even before, let's say during your transitional years, what would you tell yourself on the fact that there are a lot less job opportunities like you've said? And is there anything that right now you could provide insight to us who are listening in their 20s and struggling or facing the circumstances that you have had?
I would say don't be scared. In reference when I was in the Philippines, I'm like, just don't be scared to pivot. Don't be scared to partner up with your friends. And when I got here in the States, I think it was more like, don't be scared to go dive into the stock market. It took me so I got here 2012. I started
2012,
investing in the stock
yes.
market 2016. So that was 4 years.
Yes.
So I was like, I could have started earlier. I was scared. That's why I didn't start. I had a marker in my head. I was like, okay, I need to save this much before I go ahead and deploy all of my play money, my stock money.
Right.
I could have started earlier. I could have made more now. Hindsight, So hopefully someone's listening right now and then you're scared, and I'm telling you, don't be scared, and you start. And 10 years from now, you'll, look at your account, your portfolio, and you'll be like, yeah, I'm glad I started earlier.
Right. Like you're actually, I'm with you on that totally. Hindsight is 2020.
Same here.
So Steve, Pio, correct me if I'm wrong, but I think 2016 is also the time that you delved into real estate. Yeah, if you don't mind sharing it with us. So I think you started the stock market and you also started buying some properties too, right?
Yes. So 2016 was the year wherein I was like, okay, I got the money. I got my emergency. So I got my emergency fund, which is very important.
Yes.
Rock solid. I'm not going to touch this. And then I have that play money, and I'm like, okay, let's go ahead and put these babies to work. So stock market. And then I started looking at properties here I live in Austin, Texas, for people who don't know. So Austin is a boom town right now. Everybody's here. So Tesla's here, Apple's here, Samsung's here, everyone's here.
Big guys are moving in.
Yeah, very big guys. Joe Rogan's here.
Salesforce.
I don't know if you guys listen to Joe Rogan.
Joe Rogan?
Yeah.
Wow. I didn't know.
Yeah. He lives here. So, I can't say that I saw this coming, but the reason why I moved here was, I heard back in 2015, 14, everybody was talking about Austin. You go to Yahoo News, it's always like Austin, they gain about 120 or 100 new residents a day. And then I visited, I saw the vibe. You feel the vibe, you just see the surroundings. You're like, oh shoot, like there's good food, there's good people. When I say good people, there's people who are, it's very, this is a blue city. So in terms of the socio-economic, political jungle of the United States, this is where I belong, and this is where I see myself. Like, okay, I see my reflection. I like it here. And then, so I was like, okay, let me go buy a house here. Let me go ahead and plant some roots. And I think that was the most important financial decision I've ever made, actually buying this house.
Right.
Yeah, especially right now with with the boom, with the inflation, lumber, housing shortage, people flocking in. So I got really lucky.
That's crazy though, because I remember that time that you were still deciding. You were just looking around still. You doing these trips, coming from out of town. You go in and just Peewee is the kind of guy that will do his research, knowing him as a friend. So he doesn't just dive into things. So probably, getting that confidence. So how long did it take you? Months or weeks, or before you decided to? I'm like, oh, I'm going all in. I'm gonna be moving in.
Um, you know what? It was more of, as I said, it was like just educating myself in the beginning,
Uh huh.
and then when I came to Austin, so I was 4 years here in the
Uh huh.
States. I was kind of confident. I was like, okay, I know a little bit of this and that. I'm
Yes.
gonna go ahead and make mistakes now. I'm gonna go ahead and just
Mm.
jump in front of everything and just make mistakes. And just so you know, while we Mark knows all
Mhm.
of this because he helped me move into my own house,
Okay.
so he
Well,
knows all of this.
that's
Insider,
why
insider
I,
information.
I'm listening. I'm listening. I'm learning. I'm learning from you, Peewee. So awesome. Oh, so you're very keen on, like knowing where you belong. And,
Yeah.
when I first came here, like in 92, Austin was a city, but it didn't have that vibrance, right? So nowadays you see that vibrance. It's alive, it's like colorful. You got these food trucks over there, you got these nice houses over here on the other side of the river, and then this traffic, this plowing through the city. Back in the 90s, it wasn't like that. There was not a heavy traffic,
Mhm.
there's not that many, businesses there. But now everybody's flocking over there. So, and you did this like in 2016 when you moved over there?
Mhm.
hmm
Wow.
2016.
Okay. So, where did you how did you know that Austin is your city?
So as I said, I started hearing Austin through the news, and then some of my friends were talking about, oh, let's go to Austin, let's go to Sixth Street, and then I had to experience it myself. So came here. First time I came here was like 2013,
Mhm.
and in between 2013 and 2016, I've probably been in and out of Austin about 5 to 8 times, just
Mhm.
visiting, doing the
Mhm.
touristy stuff, and then kind of going into the local stuff, and then eventually just actually coming here and then staying at a hotel to go to different interviews
Right.
so I could work here.
Mhm.
So
So
what was your
as a
first gig when you came to Austin?
so I worked in a nursing home when I was in Beaumont, Texas. So I
Beaumont.
Oh,
transitioned
That's where
to
the
another
ex.
nursing home in Austin.
That's where the Exxon refineries are at. Beaumont.
Oh yeah, man,
yeah.
Beaumont.
If you're an
That's an
Exxon
old boom.
shareholder,
That's an old boom town.
old boom town,
Yes.
oil
Oil
town.
Town. Yeah.
All
hmm
right. So I hate to cut things short, but Peewee, so can you tell us about if you have any favorite books that you could recommend to our listeners?
I sure do. So, as I told you, when I got here back in 2012, I didn't know anything. So this book actually helped me a lot. So I got it right in front of me. It's Personal
Hey,
Finance in Your 20s for Dummies.
dummies.
Oh my
Yeah.
gosh, man. If I haven't read this, honestly, I would be dumb as a rock. But this helped me a lot,
Uh-huh.
a lot. In terms of like credit, in terms of mortgage,
Mm-hmm.
stock market. Oh my gosh, man. This is
So
a lifesaver. I love this book a lot.
it breaks down basically the finance industry into like simple things, easy to understand, right?
Yes. Yes.
Mm-hmm.
It's a catch-all book.
Right.
And then from there, you kind of have a 30,000 foot view of everything, and then you kind of
Wow.
pick, okay, I want this, I want this, I want that. So it gives you that option. So it's a really good book. And I actually brought another
Gotcha.
book. Hopefully, I could share my
Yeah,
second
yeah.
favorite book. Would
Sure.
that be
Go
all right?
ahead. Yeah, yeah. Go ahead, Pew.
So for all of our stock investors out there,
Mm.
FOMO is real. So it's all about emotions.
Yes.
So I would suggest this emotional intelligence.
Emotional intelligence 2.0.
Yeah,
Mm.
yeah. This is not only for stock investing, but personal development.
Right.
How everything is connected. So
Uh-huh.
helps a lot.
So are you the type of people, if you don't mind me asking, are you the type of people, Pew, that you would spend some time going back to the book after you've read it before, or you're just like, I'm done with that book, I'm throwing it away, put it in my shelves, and how
I'm
do you do it?
I'm more of a, me, man. Yeah, I think you know the answer to that. I read a book, And
Yeah.
I'm just glad I finished it, and I'm just gonna just chuck it. I
Yeah.
was like, tapos na ako dyan. Ayoko na basahin.
I'm done and over.
Yeah, yeah. Then I'm just gonna get the most important thing about that
Uh-huh.
book, and
Uh-huh.
then use it in whatever way I could wield it in.
Well, I think that's the way to go, right, Wawi? I mean, sometimes you just have to pick out things that you really got inspired
Yep.
in the first place just by starting to read the book. Because nowadays, there are podcasts like us. There are other stuff to do, but you
I think this is
definitely.
the second time that, our first guest also recommended the book for dummies, you
Mm,
know.
mhm, mhm.
So,
Yeah.
again, it's Stephen Pamatmat. We have two Stephens,
Doc
recommending.
Pamatmat. Yeah.
Yeah, Doc Pamatmat recommended the book for dummies
Book
too.
for
But I
dummies.
think, yeah, so now we have personal finance to
Hmm.
read.
And then,
Um,
go ahead, Wawi.
what's the best thing you got out of that book, Emo Intelligence 2.0? And why did they say 2.0?
There was actually a prequel to this book. I think what I got most out of this was just recognizing what my emotions are. You know
Mm-hmm.
how
Mm-hmm.
we're very emotional creatures, and as you get older, you're more introspective. In
Mm-hmm.
terms of, in light of the podcast, once you got all of your ducks in a row, your finances, you got your house, you're secured. There's a tendency wherein you kind of look deep into yourself, especially when
Mm-hmm.
you're in your 30s. This applies to everyone, and you're more like, okay, looking back, I'm like, okay, that's why I acted that way when I was younger,
Mm-hmm.
because of these type of emotions. And I learned to flag different type of emotions and flag the way I react to them. And it just made me more mature, made me more boring, and it made me more aware of. It actually helped me a lot in investing as well, especially with the FOMO.
I
So
like that term.
more
Yeah, I like that
FOMO,
term. Flag. Well, no, flag.
a
No, flag
flag.
your emotions.
Yeah,
Mm.
yeah, helped me a lot. Relationships, friendships, and investment. Actually, very.
Right.
Oh,
You-
so it's like, so do you do any meditation?
I used to, I used to, but it wasn't for me. I didn't like
Mm-hmm.
it just because
Mm.
I'm more of like I like to do things. I like to be more
Action.
active. Yeah.
Mm-hmm.
So I work out a lot. I have a garage gym prior to
Mm.
COVID. So when all the gyms were shut, I was like,
Yeah.
okay, I've been working out in my garage gym anyway. So that's my meditation. So
Uh-huh.
just working out.
I think it's a plus
Movement.
too. Yeah, it's a plus too because you're a physical therapist and you know the proper body mechanics. It's not like just throwing iron into the air, doing stuff like you could cause injury to yourself if you're not aware of
Mm-hmm.
what you're doing. So Pio, any favorite quote you would like to share to our listeners?
Man, I think time is gold. Very cliche, but
Mm.
we talked prior to the recording, and
Mm, mm,
I shared to you like my number one asset is time. I'm a
mm,
long-term investor. I
mm,
don't fool around with options. I don't
mm.
fool around with anything that is exciting. I am a
Okay.
very boring investor, and I choose to be boring because that's my lane. I stick to my lane.
Mm,
That's who I am as an investor, and I know myself. I think that's one of my greatest assets. Is like I know who I am and I know where I want to be,
mm,
and
Mm-hmm.
nobody can tell me otherwise. I mean, you can tell me like, oh yeah, man, I made a lot of money doing this. I'm like, I'm happy for you. That's awesome, man. But
Mm-hmm.
para sa akin, I'm boring long term. I'm gonna
mm,
take advantage of time
mhm.
because you know, investing in your 20s versus investing in your 50s and 60s is way different, right? Millions of dollars
Mm-hmm.
in difference.
Yeah, there's a big difference there.
The
Yeah,
power
time
of
is on your side if you're younger starting out.
right, the power of compounding. The earlier you start, it just snowballs into Pio,
Mm-hmm.
the way you said it, the options. Wowie. This
Yeah.
article here just was published a couple of days ago, fresh from the oven. How millennial investors lost millions on Bill
Mhm.
Ackman's SPAC. So it said here in the first liner, opening liner nila, trading options was addictive, like cocaine, says one investor. It was
Mhm.
instant gratification. So I'm just gonna read through the first couple sentences here. Um, just incredible story. This is one from institutionalinvestor.com. So Crerd, as it turns out, this is the name of one of the investors, millennial investors, is a 35-year-old unmarried Chicago psychiatrist who had invested and subsequently lost nearly $1 million, all of his savings in call options on Bill Ackman's special purpose acquisition company, Pershing Square Tontine Holdings, before it found a merger partner and linked definitively. He said that just because I have specialized training doesn't mean I cannot be just as much of a fool as the guy next door. So in summary, I've briefed through this earlier. I think he started with $300,000 and started just shelling out more and more into options, wishing it'll turn out to be great, like a, how do you say, a 10 bagger. So at one point, he said his stake in the article said his stake in Taunton was worth over $1 million on paper. For our listeners, on paper means, it's right there. You can almost touch it, but it's intangible. It's still, you haven't sold anything to realize
Mhm.
the profit. And mind you, like what me and Wawi have discussed before, you gotta factor in the capital gains tax. So if it's less than a year that you've invested in that investment, whether it's a real estate or a stock, if it's less than 52 weeks, you get to be charged on your personal tax rate. So you have to keep that in mind, because 30% is 30% for those individuals who are unmarried. So at one point, over $1 million on paper, he lost it all when his June 18 calls. These are options terms. So with a strike price, another jargon, of $25, expired worthless. The stock was around $23 at the time. So I think he would have gained $1 million if it held on just $2 a share more. But it expired worthless, losing everything, including his $300,000 investment. Had He said the psychiatrist's savings had already evaporated. He's now scrambling to make quarterly tax payments to the IRS while owing $350,000 in student loans. So he said, I considered this as a safe, I consider this a safe, calculated bet. So what do you guys think of this?
Well, I think this is just a story of, well, going back to what Peewee used, flag your emotion. You
Hmm.
know, you release a lot of endorphin when you do something exciting. Run on the road, or figure something out. Your brain will produce endorphins, these hormones that makes you feel good. Once you start options and you start winning, well, I don't know anything about options, let me preface by saying that. But once you start doing something exciting like this and you start winning, betting, um, your brain starts getting hooked to that same emotional reaction.
Hmm.
And these chemicals in your brain will tell you, let's do it again. So flagging your emotions and knowing that you're not using any rule of thumb.
Hmm.
Okay. So this is something I learned yesterday, from a uh, personal
Hmm.
finance advisor. Is, know some rule of thumbs before you get in the
Okay.
game, and be aware of what it's doing to you emotionally.
Hmm. Like
So
emotional check.
yeah,
Like brings to
flag it.
mind what Peewee just brought up earlier. One of his favorite books, Emotional Intelligence. I think I need to read
Mhm.
that book to check my emotions at times.
Yeah, I'm gonna buy that book, because I
2.0.
because I really like psychology.
Mm-hmm.
Anyway, when that happens, just know that you are, that you are being played uh, by your emotions, and
Right.
you have to be aware of that. And
Mm-hmm.
when you become aware of that, then you can control some of your emotional decision making.
Mm-hmm. Yeah.
But I think what works for most people, since
Yes.
we can't really know sometimes that we are getting too deep into this thing,
Mm-hmm.
is just follow some rule of thumb. right?
So you mean like don't get
Like,
putting all
or-
eggs in one basket or something like, or do you want to be a
yes,
specific, or do you
yeah.
do you follow a certain rule, Wowie or Peewee, for your investment strategy? I know Peewee is a lazy investor, but do you have your specific rules like being exposed to the stock market?
Yeah, some rule of thumbs like if it's already in the news, that ship has already sailed. And if I
Yes.
get too
Very
excited about
true. Very true.
something,
Mm-hmm.
yeah, and if I get too excited about something, that means a no. Don't buy it. But if it's a stock that nobody talks about and
Mm,
it's a household name,
mm,
it's been a public company for let's say 20, 30 years and it's just flying under the radar,
mm-hmm,
that would deserve attention from me. When I say attention, look in the financials,
mm-hmm,
look at their cash flow, look at their balance, things like that. And once it checks off my list, I'm like, I'm gonna go ahead and buy it.
mm-hmm.
It makes sense to me. I just don't like things on the news a lot. It's just if it's on the news, it's already done. Don't buy it.
I like how you brought that up, checking the company's financials. Not a whole lot of people I know would do that and allocate time. But for our
Mhm.
listeners, I believe it is necessary. If you don't know how to dig in the company's financials, just reach out to us and let us know what your company is thinking about. The thing about it is that's for me, I think that's how Peewee also derives his conviction on the company, like buying its stock, owning a share of that company instead of just thinking that the stock price would go up the following day. I think that's the very harmful way of investing. So just one last quote on this article. The psychiatrist said, I was riding a wave in time with, I don't think this is a psychiatrist, but another 30-year-old small business lender. Man, you would think business lenders are, but anyways, he said, I was riding a wave in time with a unique bull market. And I just thought if I turned $1,800 to $26,000, a good return in 4 months, if I kept that same percentage gain, I did the math. In 1 year, I could have gotten to $1 million. And that was where I was aiming to stop. So I guess he's, being on the greedy side of things. There are two faces, greedy and fear. So I think he was being
Well,
trying
I
to
would
push.
like to use the term emotional.
Mm-hmm.
We can like use that term
Right.
greedy, but I think you're being driven by that emotional drive to win. And
Mhm.
even though he is a business lender,
Yeah,
so
business
you
lender, 30-year-old business lender. That's
so
amazing.
even if you're highly educated and you
Mm.
got all this training, you
Mm.
just know that you're human and that your limbic system will overpower you at any point,
Limbic
right?
system, that reminds me of neuroanatomy, Wowie. For our listeners, limbic system is part of the brain that
Yeah,
controls your emotions. Well, not really controls, but it has those, what do you call that? Primitive reflexes that kind of like simulates
yeah.
the fight or flight reactions in the brain. So the more you indulge in winnings, you just keep going. Like you're in the casino, you just keep piling in until you realize it's
Mhm.
too late. So in contrast, to that article, I saw this article on CNBC, titled "A Janitor." The article titled "A Janitor Secretly Amassed an $8 million fortune and left most of it to his library and hospital." Could you imagine? I mean, I'm not putting down any profession down under. It's nothing sort of that. But the article said janitor. How over time, this janitor, Vermont-based janitor and gas station attendant Ronald Reed, or Red, demonstrated you can reach the seven-figure mark on a modest salary. At age 92 in June 2014, when he passed away, Red had quietly amassed an $8 million fortune thanks to smart spending and investing habits. Overall, I think it's the article. This is the guy, for our YouTube viewers. He just followed through with the he said here in the article, among his longtime holdings were blue chip stalwarts such as Procter and Gamble, J.P. Morgan Chase, General Electric, and Dow Chemical. When he died, he also had large stakes in J.M. Smucker, CVS Health, and Johnson and Johnson. The publication reported. So, I mean, back during the days, you know, are these even the hot stocks back then? I don't think so. No, my thought process on this is like, I kind of read through this article, and at one point I think it mentioned that he actually calls the broker or the 401k people that handles his retirement fund, and specifically for his IRA, because IRA you can dictate where the money is going. He called them to specifically buy the certificates. It's not even the shares. He calls in during his payday or something like that just to tell him to buy certificates. He actually, I remember now, he calls into the investor relations of the company, the Procter and Gambles. They called in and buys the certificates from the investor relations. That's how this guy made it like big in investing. $8 million worth on a janitor's salary. I mean, how can you ever imagine? But it's possible. It just takes
Yeah.
time. Mhm. So
I
for
think it stays true. It's not about how much you make, it's how much you save.
how much you save, and probably how much you make your hard-earned money work for you too, carefully, conservatively, and not during
Yeah.
not piling into the latest trends. So now we're gonna go into our segment where we discuss what's up with Wall Street, some events this week, and we're gonna play a couple of interviews. Peewee, hopefully you join us through the end, because we're gonna share a little bit of our reactions, thoughts, our thought process, and some of these things as we do in a weekly basis. So the S&P 500, look at this chart from January 1st. It just keep going up and up and up. I mean, how can you be just this week alone? We hit all-time highs for the third straight day as of yesterday. How can you complain not being invested in the stock market? You should, or at least start small if you're still hesitating. The state of the jobs recovery. So every first Friday of the month, government comes out with this report. As you can see in this chart, since the low of last year, March lockdowns, is slowly increasing the jobs recovery. Cumulative change in the job market has been improving. And the next chart, hiring spree. It said U.S. employers hired about 100,000 people more 100,000 more workers in July than projected. So economy is booming, people are hiring, which is a good sign. You don't see this in if we're gonna go crash. I don't honestly don't think U.S. job openings hit record high as workers quit. I mean, for this, I'm kind of like dumbfounded. Workers are quitting in droves. Job openings hit record high, so people probably still don't want to go back to work. Quits driving, job openings outnumber jobless in tight U.S. market. So there are now more job openings than jobless people. So, I mean,
I think this COVID pandemic allowed people to reassess their situations.
right.
So, it's parang nag-reset ang mga tao and they started thinking, people start thinking, okay, is this my vocation? This is what I want to do. So we're on like a national reset. So coming out of this pandemic, I'm thinking, we will probably see more people reassessing their life situations and trying to find where they find their niche.
Yeah.
So
I agree with you,
searching.
Wowie. I agree.
So looking at our chart here, for our listeners, don't worry. So continued claims. This is the insured unemployment. Back in May of last year, during the worst of cases, 23.1 million applied for the insured unemployment. 23.1 million. But now it fell down. It is still going down on a downtrend at 2.86 million. So there are a lot less people claiming unemployment.
That's a good signal, Mark.
That's a good sign, definitely. So going back is quits. Workers quit at a historic clip. Share of departing workers who quit for years and a decade back since January 2010 to June 2021 hit the highest.
That's the blip. Looking at your chart, that's the reset right there. That's when people started thinking.
Yeah, they're quitting in droves, I would say. So going on to our next topic, inflation. Obviously, it's been going up, and there's been a debate if it's transitory or not, but definitely it's still elevated. But the report said a couple of days ago, just a couple of days ago, the report came out that it eases, at least it eased down a little bit, moderates while remaining elevated. So it still met the expectations by Wall Street, but it died down just a little bit. On our next slide, this is I monitor this data sort of from the date from Federal Reserve. This is the non-revolving consumer credit owned and securitized. Quite a mouthful, but all it does is it's like let me see. I got I got my information here. It's the American consumers non-revolving. So for the non-revolving, it's the consumer, it's a closed-end credit extended to consumers that is repaid on a pre-arranged repayment schedule and may be secured or non-secured. So in layman's terms, non-revolving is it's example, for an example, it's involves the consumer motor vehicle loans plus other consumer loans. So these are like the big ticket items, vehicles primarily. So it's still ever increasing. People are taking loans to finance. So you wouldn't see this in a growing economy. I mean, in a falling economy or people who don't have money to spend. So this is the non-revolving. This is the revolving consumer credit. It's planned or short-term use supposedly. For example, it's credit card loans and other short-term revolving credit. So you can see here from June to January of this year, June of last year to January this year, it's been ever so slowly declining, because I believe this is because of the stimmy checks that are being handed. People are not using their credit cards and to spend, but they have money to spend from the bank. But it has slowly turned around. Now, quite a spike to June. So people are spending. From our previous episode, me and Wawi discussed that the savings rate actually has dropped 50% on a national average. So people are using up their savings for their expenses. So one more thing about inflation, as real estate, Peewee is also exposed to this. I myself is exposed to this because of my primary residence, and Wawi also as well, being owning our own homes. Home prices in the US soared 23%. This is published fresh from the oven as of yesterday. The fastest rate on record. Single family median value. This is at least 50%. Median is 50%. Value here in the US reaches all-time high of $357,900. I mean, if you're going to buy a house, more likely a single family home with 3 bedrooms, 2 baths would cost you $357,000. What do you think? What do you guys think of this? Like, is it ever going to be like endlessly going up or what?
Well, probably not, but you would see some more price increase, I think. When I first bought my home in 96,
96.
I was looking at, of course, I would complain if my property tax goes up, right? But I was seeing how home prices here are appreciating slower, when in comparison to the Philippines. Real estate prices in the Philippines is just crazy, right? The cost of lots, for one, in the Philippines is very expensive. So I have a point of comparison. I always like, when you first come here, fresh off the boat, you will compare, okay, how much is an apple here in America versus an apple in the Philippines,
The
right?
dollar to peso conversion mindset.
So it's the conversion mindset, right?
Yes.
As a Filipino migrant.
Of
So,
course.
the apples are expensive here. But then when you look at properties here, back in the 90s, I was like, oh, the property prices here are cheap. But now it's reversing. So what is my mindset on this? My mindset is like, America is booming, right? So prices in the Philippines have been going up steadily for real estate, and in the US it's just now starting. So I'm thinking, oh my, Texas at least is now booming. Okay, you
Right.
get me?
Yes.
That's just my like thought on this matter.
Yeah. Because back
So
in.
now we have an increase in population. People are moving to Texas,
Mhm.
and now we are booming. So I'm seeing that this is gonna, we're gonna see a steady increase, and then maybe a few years, maybe I don't know, but people keep moving into Texas, so we might
Yeah.
see a long run.
Yeah.
Yeah.
Like. Go ahead, Pew.
Yeah, I think I agree with Wowie. People are coming
Mhm.
in, and it's like a perfect storm. So coming in from COVID, you have the disruption in supply chain. So that's
Mhm.
causing houses to go up. You know, lumber was about 1,700 about 4 months ago,
Yes.
and now
Yes.
it's down to 600.
Mm-hmm. It
So,
crashed.
and then you got the population influx,
Mm-hmm.
and then you have the low supply of houses itself. So, you know, it's only going to go up. For me, I think it's only going to go up. It might cool down, but this will set a precedent for the new floor
Mhm.
prices for housing in Texas or nationwide.
I
Mhm.
think. Yeah.
And another demographic that I think that if you're in the real estate is to look at the demographics of people migrating to Texas. Are
Mhm.
they the young ones or are they the retirees? And what's the mix?
Wow.
When you
Yeah.
see younger people moving in, you're gonna see that they're gonna raise family. So I'm looking at this like a historical perspective, like after World War II. This is a war. This is a COVID war. So, a comparison would be in World War II. After World War II, we put a lot of money to, boom the economy, and now we're doing the same thing. So back then there was the baby boom. So you look at who's coming into Texas, who's
So
gonna help boom this economy.
so Wowie, we're gonna coin you moving onwards. You're the first one who said the COVID boom.
This is
The COVID boom. You hear it
okay.
from here first time in the show. So yeah, this chart here, I'm just briefly ran through it. Quarter two or
Mhm.
last year, 2020, the average or the median price was 290,000, whereas now it's like 60,000, $70,000 more. So we're just gonna play a clip. This is from straight from your hometown, Peewee, a large realtor being interviewed in CNBC. So she kind of shared her thoughts, and we're gonna play it. It's a couple minutes long. Austin Realtor on red hot housing market and rising prices. It garnered at least 6,000 views. It was published fresh from the oven yesterday. So let's go ahead and take a look or listen.
Even by those standards, we're hot, not white hot. But there's still bargains to be had. There's still sellers wanting to sell. And of course, Austin has always been at the top of the list for people wanting to move here.
Yeah, no, it's a wonderful city, great place. Words that I never thought I would hear come out of the mouth of a real estate agent. I do not want you to pay this for this house. So you've actually had to caution some of your potential buyers that they are way out over their skis.
Absolutely. We see ourselves as consultants and not just salespeople. We're in long relationships with our clients. So we have been in the position to advise our clients against over purchasing, which really comes from them just being weary. I mean, they're in a battle to buy
Right.
these homes. And it's just an emotional thing after you've been turned away 5, 6, 7 times, and they can make some mistakes.
Let's get go ahead. I'm sorry to interrupt. Let's get to a couple of listings. One is in Round Rock, which is one of the slightly outlying areas. You call it still affordable. House listed for $435,000. Tell us what it went for and why.
Well, it was listed for $435. It went for $546. We had 13 offers. 2 of them were cash, 2 were from investors, which means 11 people trying to buy a home for themselves. So, that's tough. But it was in a great neighborhood. It was right next to a lot of the amenities in Round Rock. You did mention it's such a nice bedroom community with still affordable housing in that area. I think the average price is in the lower 400 range. So that's quite affordable in most people's standards.
Is Round Rock where Dell is? Am I remembering correctly?
Yes.
Okay,
Well,
so,
Dale's lots of places in Austin.
Yeah,
but
Dale's
their
lots
main
of places.
campus is there.
yeah.
Yes.
All right, let's look at the other listing, which you offered at 2.6 million in West Austin, Calera, higher end listing, pool, the works
Jeez.
there. That looks very.
Oh, look at that house.
Beautifully photographed. What did it go for?
Well, we got an offer price of 3.5. We did get 11 offers on that property, the majority of which were cash.
Gosh.
But this seller
Cash.
and I chose this offer that was a loan because they were willing to step so far above the next highest offer. And I think this is an unusual situation, important to know. They were also willing to put up nearly $500,000 in what we call due diligence money, option money, which means they would have lost that money if they terminated.
Wow.
But that made it a sure thing for that seller.
So these people wanted that house some kind of bad.
Whoa, what do you guys think? Paying $900,000 more.
Boom. Boom.
Yeah, it happens a lot, Mark. It's very rampant, and you know, I hear friends being on the same boat. I was on that boat looking for my second house,
This is in Austin, right? Pew?
and this is in Austin. Yeah,
Austin.
yeah, and it's everywhere, man. It's everywhere. It's in Austin. It's in New York. It's in Dallas. It's in Houston. But Austin, it's a good example, being at the cream of the crop right now.
Mhm.
And
Right.
if you're a builder, you're gonna have a hard time keeping up with the demand.
I think that's another aspect of it. That's why prices are just going up.
Yeah, yeah, and people have lots of money. They're coming from different coasts.
Can you
They
imagine
want to be in Austin, and they
offering
have the
cash?
money.
Yeah.
Yeah.
Can you imagine offering cash? $900,000 more, 2.6 million, and then you're offering cash for 3.5, and you're
Mhm.
doing your 500,000 escrow, or is that what you call it? And if the deal doesn't go through, you lose the 500,000. That's how tough it is in the real estate market. I think the early ones in the game who already bought in and started some investments back then are really reaping the benefits right now. Yeah. So as you've mentioned, Peewee, the lumber price, it fell, like you said,
Yeah.
1,700 to 600. So half of
Yeah.
lumber dealers now sit on excess inventory in the United States. This was published just yesterday afternoon. So I think inventories, the supplies are going up. Hate to say
Yeah.
it, but I think if this is the case, then lumber prices obviously reflected it. It's now down 70% according to this Bloomberg article. So I'm not sure if this indicates the peak. Oh shoot, I closed the window. But I'm not sure if this is indicates the peak pricing, or hopefully it'll just be like on a, what do you call that? A plateauing, and hopefully we set up a floor or support for the housing prices as house prices, rose to a fastest rate at this point in time. So ito yung stock market. This was published.
Can I ask Peewee a question?
Go ahead,
So
sir.
now that you see an influx in Austin, so what kind of developments are happening in the surrounding cities around Austin, Peewee?
Yeah, good question. So, as aforementioned a while ago, Austin is growing. And then you have the Round Rock area, which is north.
Mm-hmm.
And on the south end, there's the Buda and Kyle complex. So there's a lot of home buildings. There's a lot of apartment complexes. And you can just imagine houses are being built in smaller lots. So the spaces in between those houses are not as wide as before, just because they're trying to build as much house as they can, trying to house as much people as possible. And as you saw, it doesn't really matter how big, how small the house is. It's always gonna sell for over the price.
There's incredible.
So it's happening everywhere.
It's everywhere. And people who come into Austin they have jobs in Tesla, they have jobs in Apple, they have jobs in Salesforce, they have their own business. Or you know what? You could be a retiree sitting on a nest egg. And as I said, the city is selling the vibe. As you said, you used the word vibrant a while ago.
Yep.
So that's what it's selling. And it's selling like, hey, you want to be around people who mirror who you are, you know, who mirror your views. You want to eat good food.
Mm-hmm.
You want to have this type of clout being in a good city. You have to pay
Right.
for it.
Mhm.
Definitely, you get what you pay for. What does Warren Buffett say about price is what you pay, value is what you get. So I think if you
Mhm.
definitely want it bad, then you gotta, fork some money
Mhm.
into it. So yeah, we're getting in the long stretches of our episode. Thank you guys for listening. If you're still here with us, please hit the like and subscribe button. For now, we're just gonna run through with our sentiments in just one more interview and 10 cent. Just gonna briefly run through 10 cents numbers, what's going on with the company. So this is a chart from Variant Perception. It's a blog. They're keen into like just not just the emotions, but like charts that are kind of helpful in determining where are we at. So basing on their chart and their article recently that was just published, it said here that we're due in time for a pause, sort of, because average they put it in a chart where average stock market S&P 500 rallies off of 1970, 1974, 1982, 1987, 2003, 2009, 2018 lows. So throughout this, the average rally kind of like plateaus by the 50th week on until 92nd week, and then it resumes its climb. But in this COVID boom rally, as what we would say it, we are still flying off of the average. So I'm not saying it's going to crash or whatever it takes, but it looks like we're due in time for a pause. That's all what I'm trying to say in this graph. So there's another YouTube interview, last interview of the day, where it said the title where the ultra rich are investing their money. So this is a good clip from Bloomberg interview that got 62,000 views. Let's just play it for our listeners. These are very important information.
What did you learn in this study? What are your clients focused on? Absolutely. So family offices influence in capital markets is continuing to increase. And that's really because of their size as well as the number of family offices that are outstanding. You combine that size with their framework, which is unique, and it does allow them to take advantage of unique opportunities that others might not be able to act on. In terms of what we found to be most notable were their allocations to alternatives, their interest in digital assets, and also their focus on operating businesses. So for example, in alternatives, these clients suggested that their average allocation was about 45%. You compare that to a traditional ultra high net worth individual, which is about 20 to 25%. But they are doing much more of a barbell also. So they do have relatively high levels of cash and fixed income. And really on the alternative side, because of the structure of not being wed to outside investors in a fixed mandate, they're allowed to, it enables them to be invested over long terms and take that illiquidity premium and also take advantage of the wealth creation that's happening in the private markets.
You know, one of my favorite things out of this is that the 50%, more than half are expecting on reducing their cash allocation, meaning putting dry powder to work, and more than 70% are expecting to increase their allocation to equities. So what's the entry point for stocks?
Yep. This group really takes a long-term investing approach. If you actually look at the S&P over the last 10 years, if you were invested the entire time, you would have had an annualized return of 17%, total return of 470%. If you were out of the market in the best 50 days, zero. So what does that mean for this group? That means that they're looking to stay invested over a long multi-generational time period. And so this group is not necessarily taking advantage of minor dips, but to the extent that we do get a significant equity allocation, you'll see them as a marginal buyer. But what was interesting also is whether it's inflation or whether it's low interest rates, these investors are positioning similarly. Usually you won't hear low interest rates and inflation in the same sentence for an investor.
All right, we're going to stop it there. I think we just got the most important information of that interview. So, Peewee, Wowie, what do you think? If you weren't invested in the 50 best days, I think she said, you would have generated nothing, 0%. But if you stayed in the market, you've generated at least 17% annually. Overall, 470% positive returns in the past decade or so.
Yeah, well, I'm actively invested 3 years now, and that perfectly reflects my portfolios at this time.
Yeah.
What she
The-
just mentioned.
Yeah, I think it's just basically what dives in. Going back to what Peewee said, just invest and stay in it for the long term. You don't really have to like time it. Like it says here, this is
What?
a Goldman Sachs study of the ultra rich. They don't do this study, randomly. They did this study to find out where the money is going from the
Yeah.
people who are labeled as ultra. I don't know how obscene that would be. Maybe billions in portfolio. 31% of their allocation are invested in equities. For listeners, equities means stocks. So 31%.
Yeah. That's what happened to me. So the last 2 years, my investment shifted from funds, ETF mutual funds, to half of my investment has grown into equities.
Mhm.
So this is a like an organic change. I didn't think. Well, I thought about it. I saw that I had to shift. So
Hmm.
I started moving some of my investment towards stocks,
Stocks, yeah. How
and
about
that's
you,
in the
Pew?
recent
Mhm.
last 2 years.
I think time is definitely the greatest asset. As I said, I keep on harping on that because
Mhm.
if you started, let's say 2010, 2015, what's happening in COVID right now?
Mhm.
It's just a blip. It's just a
Mhm.
blip on the whole spectrum of things.
Yes.
Okay, if you've invested in the stock market for 20 years, let's say from 2010 to 2030, you're not going to focus on that one blip. Oh yeah, I made money during COVID, this blah blah blah. No, you're going to look at the whole thing and you're going to be like, that COVID, yeah, it made me some money, but that's not the whole story.
Mhm.
The wider your story is, the wider your network is.
Mhm.
Okay, and that story is, when did you start and when did you die? That's
Mhm.
that's all it is, and it's just you just have to focus on good, solid information, solid companies like the janitor did,
Mhm.
Mhm.
like the ultra rich people did.
Mhm.
You saw it was equities, it was real estate. It's just old wisdom there.
Right. You just can't, beat that fact or his historical, feats by these people. It just doesn't random and happen in random, I believe.
Yeah. And Mark, I
Yeah.
just wanted to add something a while ago.
Yeah. Go ahead.
Sorry for
No, yeah.
chiming in.
Go
So a
ahead.
while ago I said, hey, I do research,
Yes.
and it could be a little bit daunting for some people, but I use an app for it.
Mhm.
So this is an app. I actually don't pay for the app because every month, if you
Yes.
go into the app, you get like 10 free reviews.
Yes.
It's called Simply Wall Street. So this is the
Oh
interface.
yeah.
Yeah.
Yeah, I
So
like
I'll go
that.
ahead and you like it? You've used it too?
Yeah, I've used Simply Wall Street, and I like the graphic of that, because
Yeah.
you can visualize, you can visualize, growth
Yeah, I'll
and
show you a little bit. There's a snowflake,
awesome.
something like
Yeah,
that.
that's what I
Yeah.
was talking about. I like that graph.
Yeah. Simply Wall Street for
Simply
people who
Wall
don't
Street.
like researching. Yeah.
Mm.
I'm very lazy. As I said, I'm very lazy, so I just
Right.
pay or I just look for other people who do the research for me, and then
Mm.
if it's fun to look at, like Simply Wall Street, I'll use it. So hopefully you guys can use that too and make money out of it.
So it's not just like a random like
Uh,
spitting out information. It's relevant to what you're looking at, specific
Thank you,
companies.
Peewee. That's a
Mhm.
good one. Yeah, I
Thank-
like that
Yeah.
app. Another app I found was Atom. You can do a
Mhm.
free trial for 30 days. That's what I am posting on the group.
Mhm.
Is insights from Atom. It's a
Atom.
breakdown of the daily things that are going on in the stock market. Atom.
Right. So it
Thank you,
gives you
Peewee,
updates.
for sharing that.
Yeah,
Sure.
I
you guys
like
are
that.
welcome.
So the
So
next
so we
segment.
need to have tools, right? We need to have tools. So if we can share tools, then it makes us work better.
Right.
Yeah,
Agree.
yeah. This is way better than listening to your uncle who invested in a company because he heard it from Jerry from accounting.
I know. Friend of a friend of a friend. Distant relative.
Yeah, yeah.
Well,
Mhm.
So going on to our next segment, industry performance. On a weekly basis, we review the industry. So for the past week, financials and energy outperformed the entire markets or different other industries. Looks like these are the reopening plays are back in play. So
Oh, wow.
people are diving into financials and energy. But for the past, since January of this year, definitely energy and financial are carrying the torch to the finish line now that we're past the second quarter. So we'll see how it goes because previously in the past month, we've been looking at this and it's been tech. So now people are slowly moving into the reopening place for some reason, despite the COVID, what do you call that? The cases are rising. So sentiments, the thing that we looked at, sentiments, there are only three: bullish if you're up, thinking the market will go up. If your market's going down, you're bearish. Neutral if you're like in the middle. So as of 11th or a couple of days ago, bullish sentiments increased up by a percentage to 37%. Bearishness has almost stayed the same. Neutral about the same. So I guess we're slightly closing into the historical average of 38%, but not quite there yet. So people are still skittish about the stock market, according to American Association of Individual Investors. The fear and greed chart, which shows the emotions, it's now at 42. Interestingly, even with the all-time highs that we have achieved all throughout this time, we're still at fear at 42. Previously, a week ago, we're at 34. So we're gaining a little bit of traction. People are slowly getting greedy, but we're still overall at fear. Fear and greed over time. This chart was ever going down since the start of the year, but as of mid last month, it slowly has been increasing. We're past the 50% mark. So people are getting a little bit greedy, I guess. The cryptocurrency, greed and fear and greed index. We're now at the greed side, 70%. Whereas last week we're at neutral, 52. I think Ethereum in the past week alone rose 27%, outperforming Bitcoin. But who's following? I don't know. Are you following this, Peewee? The Bitcoin cryptocurrency?
Not at all.
Not at all.
Nope.
I'm following it.
Oh,
Yeah, they made some major developments on Ethereum, but I think what's really driving it is what you just mentioned is greed
greed.
right now. I don't think a lot of people are looking at the developments.
Mm-hmm. Well, here's a interesting fact from Investopedia. They only come out with this every so often, so we were lucky to have this pulled up. It says investors take their foot off the gas as expectations dim. This was published 3 days ago. Keep in mind that we just tackled through different types of surveys, which indicated people are getting bullish. But this says Investopedia. This is where you get your facts from, like definitions from financial jargons, updated August 10th. So they did a survey for August 2021, this month. What do you think U.S. stock market returns will be over the next 12? This is the same questions for American investors. 18 plus U.S. investors, 18 years and above, 720 surveys for August. People are getting less bullish in this report. People specifically for thinking that the stock market will be up 0 to 5% on the next 12 months went down from 30% back in March to 19%. So basically, people are getting slowly bearish on this aspect. So you can never tell. Sentiments are just sentiments. People might be pissed or whatever. They don't have jobs or, stimulus are ending. Then therefore they think the stock market will crash. But you can never say. But it's good to have an insight, like what the general public is thinking.
Yeah, I think a lot of that depends on your spectrum, what spectrum you're in, what level of stability your life is in.
Financial stability, like Peewee said, and also our previous guest, Dr. Stephen Pamatmat, he mentioned that, always take care of your emergency funds.
Yes.
Because that will definitely change your aspect in terms of financially investing or being aware of the stock market. Volatility index is actually down 8% for the past week. So we don't saw any like up and down market. Not so much. Okay, so for a final section, 10 cent. So people are dumping this stock like a hot potato. Kathy Bay, before anything else, Kathy would dump all of her investments in this China stock market during the sell-off. I mean, for me, I don't think that's a good sign. Like, why would you, why all of a sudden your investment thesis change? But I guess, she pays a lot of people. She has a tons of experience. I don't discredit her. It's her judgment. So here in this
Mhm.
Bloomberg article, it says Tencent boss loses 14 billion in route, more than Jack Ma. So basically, it's just saying that the CEO or founder of Tencent loses a lot of money because of his stake in Tencent over the past week, meaning that the stock has been relentlessly going down. So,
Mhm.
what I
So
would
if I,
go
I'm
ahead.
thinking, if you're highly speculative, right, you have to be very agile. So
Yes.
if you're, speculating a lot, you have to be very agile in your gameplay.
Mhm. So, like this, for example, Tencent. That's just a disclaimer. I'm an active investor in Tencent, and I've been buying since it was dropping. I ended buying last week. I'm still in losses for sure, but I don't think it's gonna be, losses for long term. But I'm just investing, speculating. How about you guys? Do you have any exposure to Tencent or?
No, not directly,
Mhm.
just through a fund. I
Right.
don't have Tencent or Baba in my account, but I do have API Agora,
Mm.
which is like a cloud computing company that's
Right.
invested in China. It's
Right.
gone down a lot, um,
Hmm.
but I got that last year.
Hmm.
Um,
Mhm. I have Alibaba, but I don't have Tencent.
Gotcha. So what I'm getting at on this the brief discussion of Tencent, since it's our cover page, is revenues or business performance so far. So it reported its earnings for the 3 quarters in March. It ranked $20.3 billion in sales, compared to last year's $15 billion. So it generated $5 billion more in business despite the clampdown or whatever, gaming mobile, that's happening in China. It still grew its sales, its profit, which is the most important thing for us investors. It rose by 3 billion, to say the least, like 3 billion year on year. So the company is still minting profits. It's generating profits. It's growing its business despite the clampdown. The company has, I'm gonna pull up the balance sheet, which we closely look at the cash and debt uh, information, which further strengthens our conviction, or at least my conviction in the stock whenever I buy it. Um, the more cash in the balance sheet, the better. The more debt to cash ratio, it's a little less more convincing for me to dive into the stock if it has more debt. Uh-oh. Some technical issues. But for year to date, Tencent actually is down 16%, whereas the Nasdaq, I would say it's almost 20%. And what more is devastating is back in March or February 12, when it reached its all-time high, I believe, it's now down 38% from its all-time high. So the balance sheet I finally loaded. The company has $34.5 billion in its balance sheet. Its total debt is 40.8 billion. So if the company want to pay its debt, it could, and it will be just left with 6.3 billion, which its profit would automatically cover. It's more than enough. The company is solidly liquid. It can take, I'm not saying that buy the company now because it's way down there. I'm not saying it's not going to go down further, but I believe, if you want to be exposed to China, as well as take advantage of the selling drought, which in our previous episode we saw billions of dollars piling into China right now. I'm not saying it's the ultra rich who are like diving into buying the panic or buying when there's blood in the streets, but Chinese government, especially nowadays, are just hitting each and every sector. They call Tencent as opium for the mind for some reason, but they pulled back from that tight tight statement. But yeah, I guess it's a pretty good investment for me. Not an investment advice, but I think it's a good way of being exposed to China. So with that, any quote for the week, Wawi?
Yeah, well, since we have Peewee as our guest and I can see sunrise on the background there in Austin,
So
I'm
go
gonna
ahead.
paraphrase one of the things he mentioned in our group
Yes.
a year back, right? So he mentioned, Peewee, if you remember, you mentioned exit strategy. So know your exit strategy and stick with your exit strategy.
Referring back, rule of thumb.
Yeah,
You gotta
yeah,
invest
borrowing
with
that
a rule
from
of thumb.
Peewee.
Yes. Know your limits. Exit
Yep.
strategy. So, well, Wawi and Stephen, thank you so much for coming on to this show this morning and sharing your investment experience to our listeners. I'm so happy that you joined us, Peewee. Appreciate
Salamat,
your
Yeah,
time
salamat
this
sa
morning.
pag-imbita, guys. It's
yeah.
fun. I mean, I learned a lot from you guys. Salamat.
Salamat din, Peewee.
Thank you so
Glad
much.
to meet
Maraming
you.
salamat. Yes. If
Nice to meet you too,
listeners,
Avi.
that does it
Mhm.
for this episode of Mark You and Wawi Show. Send your questions, or if you just want to say hi, send us an email, markyuwawishow@gmail.com, or tweet me at marku_DPT. Remember,
Mhm.
build that emergency savings and invest the rest. Again, this is Mark You signing out.
And Wawi Santos signing out.